If you are thinking about signing up for Kikoff Credit Builder, one of the first questions that naturally comes to mind is simple. What can you actually purchase with Kikoff? In this video, I will break this down clearly, based on how Kikoff really works, what you can and cannot buy, and whether this credit builder makes sense if your main goal is to improve your credit score. Let us start with an important clarification. Kikoff is not a traditional credit card, and it is not a loan that gives you cash to spend anywhere you want. Kikoff is designed primarily as a credit-building tool. That means the way purchases work is very different from what many people expect at first. When you open a Kikoff Credit Builder account, you are given access to a revolving line of credit. However, this credit can only be used inside the Kikoff platform. You are not getting a physical card, and you cannot use Kikoff at grocery stores, online shops like Amazon, or for everyday expenses such as fuel or food. So what can you purchase with Kikoff Credit? The main things you can buy with Kikoff are Kikoff's own digital products and services. These are intentionally structured to help build your credit history, rather than to fund shopping or lifestyle spending. The most common purchase people make with Kikoff is the Kikoff Credit Builder plan itself. This is the core product. You are essentially using your Kikoff credit line to pay for a monthly subscription. That subscription payment is then reported to the major credit bureaus. By making on-time payments every month, you are demonstrating positive payment behavior, which can help improve your credit score over time. Depending on the plan you choose, Kikoff may also include access to features such as credit monitoring, credit score tracking, and educational tools. These features are also paid for using your Kikoff credit line, and the payments are reported as part of your credit activity. Another type of purchase available through Kikoff is digital financial tools. These can include budgeting resources, financial education materials, or credit improvement insights that are built into the Kikoff platform. Again, you are not buying physical items. Everything is digital and focused on credit and financial health. It is also important to understand what you cannot purchase with Kikoff Credit, because this is where many people get confused. You cannot use Kikoff to buy electronics, clothes, subscriptions from other companies, or any third-party products. You cannot withdraw cash. You cannot transfer the credit to your bank account. Kikoff does not work like Klarna, Afterpay, or a buy now pay later service. It is strictly limited to Kikoff's ecosystem. Now you might be wondering why Kikoff is set up this way. The reason is risk control and credit reporting. By limiting what you can purchase, Kikoff reduces the risk of missed payments and overspending. This makes it easier for people with little or no credit history, or those rebuilding damaged credit, to manage their account responsibly. It also allows Kikoff to consistently report small, predictable payments to the credit bureaus. From a credit building perspective, this structure actually makes sense. Credit scores are heavily influenced by payment history and credit utilization. With Kikoff, your credit line is usually small, and your monthly payment is fixed or very manageable. This makes it easier to keep utilization low and payments on time, which are two key factors in improving a credit score. So is Kikoff worth it if you are looking to purchase things? If your main goal is shopping or financing purchases, Kikoff is probably not the right product for you. You would be better off looking at a secured credit card or a starter unsecured card that you can use anywhere. However, if your goal is specifically to build or rebuild credit, then what you are purchasing with Kikoff is not items, but credit history. You are essentially paying for the opportunity to show positive credit behavior. Think of it this way: when you use Kikoff, you are buying time-tested credit signals. Every on-time payment adds to your payment history. Every month you keep balances low improves your utilization ratio. Over time, this can make you more attractive to lenders who do offer real credit cards, loans, or financing options. Another question people often ask is whether Kikoff reports to all major credit bureaus. Kikoff typically reports to at least one major bureau, and in many cases more than one. This means the purchases you make inside Kikoff, even though they are limited, can still impact your overall credit profile. It is also worth mentioning the cost. Because you are purchasing a subscription or digital services, you should always compare the monthly fee to the potential benefit. Kikoff is not free, so you should view it as an investment in your credit rather than a source of purchasing power. Before signing up, ask yourself a few honest questions. Do you struggle to get approved for traditional credit? Do you need a controlled way to build payment history? Are you comfortable paying a small monthly fee for a structured credit building tool? If the answer is yes, Kikoff can be a practical option. If, on the other hand, you already have fair or good credit, and you want flexibility in what you buy, Kikoff may feel too limited.